Hello, hello, hello. Hey guys. Thanks for joining the stream. Looks like we're finally up. I got my mic fixed. Let's go get this thing started. Got to fix a few audio things. Looks like my speakers were disconnected. J-Ruff, open your big mouth for me. Damn it, didn't go through. Aw, man. Stand by there, all y'all in YouTube land. I gotta fix this. I gotta fix this audio problem so that y'all can hear everybody in the trading floor. Man, why is it not going through? Come on, OBS. Why are you fighting with me now? Why you do this? Dang. This is no fun. Yeah, I know you guys can hear me, but y'all can't hear all the Discord participants. It's kind of less fun. Man, I don't know what's up with this. Why OBS won't work. Yeah. Dang it. OBS, why do you fail me?
Give me more work.
Oh, Jesus. God. Well, I heard you now.
What was that?
Dude, Boulay, were you just filleting your mic? Oh God! All right, let's try not to blow out my eardrums. I changed audio settings there at the last second, and it like all I could hear was just Boulay and a dull roar in my ears.
I don't know what that was. That's crazy.
All I could hear was just Boulay and a. Hey Boulay, just to let you know, I'm getting feedback from your microphone. There's an echo coming through when I'm speaking while you're speaking. All right, guys. All right, we finally got the audio fixed. How's everybody doing? Thanks for joining up the stream. If you just dropped in, do us a favor and leave a like on your way in. Subscribe if you haven't, and be sure to share this on Twitter and anywhere you can. There's a tweet that just went out. If you could just give that a retweet and help out the algorithm, just so that we get a few more people in here to join us in for the fun. So, covering a couple of tickers, I was looking at T-Built. That's Tough Built Industries. It's I'm familiar with the company, and you know what? I've always. I mean, it's not what I would consider for a solid investment, but I gotta say, everybody that called this one for a squeeze really, really outperformed. At the high, it couldn't quite break above this 950 level, but at that time, 254% from its low just 4 trading days ago. So if you jumped into this on Monday, congratulations. It looks like it's retracing pretty significantly now. There's a very wide band on the ATR for this around VWAP, and it is trading below VWAP right now. So it looks like it's finally weakening out. Hopefully you took some profit, get a little bit off the table. That's a huge win. So if you got in this, congratulations. I'm not in it, but I did want to bring that out to everybody. Oh, Gotcha. Yeah, I gotcha. My Discord was muted. That was my bad. Boule, I think you got your microphone really close to your speakers. There's a bad echo every time you start. I just want to give you a heads up on that.
Actually, it's because I was testing the volume from YouTube and Discord. I wanted to see which one was off.
Gotcha. Copy that. All right. We should be good to go now. All right, let's go ahead and cover some of our other tickers. So Excela is the one that I've got my eye on right now, which is it bounced nicely today. The fall down in the morning, I really wasn't all that worried about it. It was low volume compared to its usual trading. It just like kind of fell off, and then all of a sudden you had this huge surge of volume right there in the middle of the day as we went into the afternoon session. So this is an excellent, excellent reversal, and now it's beginning to look like an intraday cup and handle, which is it's awesome to see. I gotta say, um, overall, Excela was looking like a cup and handle in general, just looking at it on the hourly, and you can also see it on the daily time frame. What I was disappointed by was that it got stopped here, and it kind of like it showed a little bit of weakness here, a bit of bearish divergence on the RSI. But considering that the high occurred in after hours on low volume, it's really not that surprising that we fell back down from this high and then couldn't get back above in after hours again. There's just not a lot of volume there in the morning pre-market session to get us moving in that direction. So anyway, looking at where Excela is currently without the aftermarket session, I see that we've got a double bottom that's set up here. Really nice. Very, very nice. And of course, we had this very tall green dynamite candle that appeared immediately after we bounced off of that 1350 level. So, still looking really good and strong. I gotta share what happened to me over the over the afternoon yesterday. I was focusing on work, not really paying much attention to what was going on in Twitter and all that. I just unfortunately didn't have time. I'm really behind on work lately, so I've been trying to catch up. And so what happened was I went back and to my Twitter feed, and I saw everybody was just screaming at me that Parchata, the the executive director of Excela Technologies, was signaling to me. I'm like, what the hell is everybody saying? And then I saw exactly what they were talking about. so, so the day before or yesterday, I had tweeted at Excela after they announced that they were going to partner with the Dean Fossey Gorilla Fund, which I thought was a pretty funny signal that they were on Ape's side, or maybe they're just hyping us. I don't know, but they did. They are partnering with the Dean Fossey Gorilla Fund to save endangered wildlife and gorillas, and I just said apes see you Excelitech. We won't abandon you as long as you treat your retail shareholders with respect. So get your Class A stock compliant with Nasdaq, file your extension appeal, issue a buyback if you can, and don't you dare dilute on us again until we save you. And now the day the day that happened, at the end of the day, I see this filing where Parchata, the day that I sent that tweet, I didn't even know this until the end of the following day, that he had purchased 666,666 shares. I'm not sure that you can see this, as Zoom is all screwed up, but this was just too damn funny. Here it is. You can see that he made an acquisition of 666,666 shares at an average price of 13 cents. Par value 13 cents. Oh, wait, it's in the footnotes. It's in the footnotes. So it's not here. So I don't know what his notional value was. But that was just hilarious to me. what I did take note of was that this was a direct form of ownership. So he made this as a purchase. Okay, this was not an award from the company. He did a direct purchase. So this was done intentionally. It's not a fluke. He bought this amount of shares because that's the amount of shares that he wanted. And that's just, I mean, for one, it's flattering. Maybe it's a coincidence. It can always be a coincidence, but I'm not one to believe in coincidences. And you know what? All right. So I see you. I see you, Par. Um, for those people been talking to me about this as well, that Parchata was involved in a couple of companies, especially one in particular in the .com boom that went belly up because they made some really lofty estimates and it drastically underperformed. There was some speculation that they were going to have like a $900 million deal that only generated like $64,000 or something like that. Um, so vast disappointment. I'm probably off on the numbers a little bit, but the the claim, the amount of money that was made in that company vastly underperformed what was estimated. So because of that, um, Parchata has a bit of a reputation, and that it's not served him well. So there's that is something that's worth being aware of, and I recognize that. But nobody likes having their name as mud all the time. So yes, Xela diluted heavily, and I do think that that was a mistake. The company was in a position where it was trying to rapidly grow and gain funding during a time where um, they had other options for financing, and I think that they were keen to use their share selling power rather than assume new debt. But at the same time, when they realized that the financing and interest rates were so good, it only made sense to take on that debt while you could take basically free debt. So they ended up doing both, and it's now put them in this difficult position. They're hurting right now, and that's evident based on where the stock is currently trading. However, just seeing the amount of volume coming into this thing, the amount of volume here, just in the last 2 months, is exponentially higher than any other time in its past. Even the highest high that it had had in terms of its volume. Let me get this. Let me get my volume indicators up here. So the highest high in volume that it had ever had. Let's see, where was this? Where was it? There was a big volume candle. It was like 660. It was like 600 million in volume. I think it was in a single trading session. I can't find it for some reason. Oh, that's because I'm on the hourly. No wonder I can't find it. So the highest volume that they had previously experienced was back here on the 22nd of June, 660.5 million. But even before that, the highest that it had ever experienced was 514 million shares traded in a single day. And that month, when that occurred, their stock moved by more than 280%, which, granted, that's, the COVID surge, big speculation, huge screaming returns and all of that crap. Um, and it had happened after they had announced some pretty juicy deals after they regained NASDAQ compliance through a reverse split. So, those kind of volumes were excellent. It was excellent high volume. We're now doubling that volume almost in such a short period of time, and the stock is barely moving. So people are probably asking themselves, why the hell is it taking like a billion in weekly volume just to get this thing moving? We're now at, let's see, in 50 days, we've experienced about 7.35 billion in buying volume. Let's actually get this to the last 30 days exactly. So we've got 6.4 billion of that occurred in the last 30 days from the 22nd of June to 22nd of July. That's a huge surge in volume, big change. So all of these signals all of these events, this high volume, the reversal in price action, the consistent slow crawl grinding upward is all a good sign, especially breaking out of this bull channel. This is what we were really looking for, was a clear break of this bull channel. We finally got it, and the price is staying above a level of support. It's now established a clear level of support. It won't break below 13 cents. That's excellent. That's exactly what this stock needed. It needed to show strength. So there's a couple of other things that we need to cover on this stock in particular. A lot of people have been asking me, are they at risk of NASDAQ delisting? Yes, kind of. Here's the thing. NASDAQ delisting would be on the 8th of August. They have to get their stock price above $1 for at least 10 trading days consecutively before August 8th. So that puts a closer deadline of July 26th. They have to get up to $1 by July 26th. So that is also that is kind of winding the clock up a little bit faster. Here's the thing. Excela is able to request an appeal from NASDAQ, which they almost always grant, as long as the company provides guidance on how it intends to get its stock price above $1 per share to regain listing requirements. They are entitled to receive a 180-day grace period. So they have an additional 180 days that they can request from NASDAQ in order to get compliant. So that would push that out until next year, around January. So if they could get that appeal process, which they most likely have already done so, they have a plan in place and they do have the capability to issue a reverse split, but I detect hesitation in doing so because honestly, I think that I think they've been trying to hold off for as long as possible. So they're almost certainly going to get another extension. Excela depends on its shareholders in order to keep providing the company with liquidity right now. And they're also just about ready to go profitable for the first time. Their company is almost at that level. If you look at their EPS, is finally approaching break even. So let's go ahead and take a look at the earnings here, down here in the lower right hand corner of my chart. You can see that their estimates are slowly creeping up towards the break even marker of 0.0 EPS. That's earnings per share. They underperformed in Q1 of this year, but so did everybody else. Q1 was awful, especially for tech and tech service stocks. So everybody was getting pinched at that time. So it really isn't all that much of a surprise. The Q2 earnings I expect to be a little bit more bullish, but even that aside, Excela has, as long as they get that appeal processed, they have until next year to get above $1, and the company already has enough cash on hand that they could actually buy back a good portion of their stock. Like they probably wouldn't be able to buy back the entire company and like take it private or anything. They have 82 million in cash on hand according to their last earnings balance sheet. That money has probably been used up some, but I feel like they could at least buy between 50 and 100 million shares easily with cash on hand if they wanted to. You've also got executives in the company who are very wealthy. Parth Chadha himself has a net worth that's he's a multimillionaire because he has had successful businesses. So the man himself is in a position where he could likely purchase more shares if he wanted to. Now the 666 shares, I'm again, coincidences are always possible, but I don't believe in them. So the fact that that hit the same day that I tweeted them out about, guidance for what to do after their partnership with Dean Fossey, I'm going to take it as a sign that they are going to do something soon, and I have no doubt that he could absolutely purchase more than 600,000 shares if he wanted to. So this, I feel, is just the beginning. The company is doing better. The performance is there, and they are depending to some degree on retail to get their stock back in compliance. So that's what's going for Excela. On the day, they're trading very nicely. We retraced back to retest that 1350 level. which is above the 13 level that we had tested previously. So we are establishing higher lows. It's an excellent, excellent sign of strength. So we were heading up on this trend previously. We have since broken down below that trend and then retested this low. This is an area of support, which has basically just formed a double bottom for us. Let me go ahead and get rid of some of this stuff. We don't really need this bull channel anymore. We already know that we've broken out of that. We saw this bull flag, which, of course, it consolidated through and made another push upward. We don't need that one either. All right. Let's get rid of this one too while I'm at it. Okay. 757,000 share order just crossed the tape. That's pretty big. Notional value on that. Let's see. We'll just round it to 15. We'll just round it to 15 cents. That's $113,550 that just crossed the tape to the buy side. That's pretty big. If that executed, Keith, I'd love to know. I don't have time and sales on my trading view charts. I would love to have that. Thank you for that shout out, by the way. All right, so now that we've covered Excela a little bit, what I'm looking for is for it to complete this consolidation that it's currently in. As you can see, still establishing higher lows. And we have a bit of a symmetrical triangle forming here with a double bottom pattern here in the middle of it. It's a little bit weird that we had this deep spike down, but I suspect that this may have been some stop loss hunting just to fill a big order because the volume surged pretty big this afterwards. So I have to
pretty
wonder.
interesting with those. They, if you look at the volume shelf on just those moves right there, it almost looks like they saw the glut of shares. They were trying to fill a big order, so they brought it in after hours up above the giant piece of liquidity, and then during market drove it down, and then did it again in after hours the next day, and they kind of seesawed it up.
Oh, that's interesting. Okay.
So they bring it up and then they drop it through and they bring it up to do it again, but at higher lows each time.
Mm-hmm. I also see this aftermarket fill here. This was likely a dark pool print. I'd be interested to see what this was.
Oh, it was.
Yeah, that's a big print. That's a big dark pool print. This moved. All right, so this order filled. This order filled pretty low. Okay. I bet you this was an order on the buy side, actually. You can't really tell from the candles. We can only really tell from where it was trading. But considering that dark pool prints usually print after hours, at least 3 hours after, or up to 3 hours, up to 3 hours after the execution, the fact that it's between this range here, I expect that this was probably an order to the buy side. So they got fills all the way down through this area. They probably got most of their fills down in the 13-cent range, like 13, 14-cent range.
I just sent you the dark pool flow. It looks like today alone, it's 2, 4, 6, 7, around 700 million shares today.
Mm-hmm. Let's see, where did you put that at, J-Roth?
I just popped it in a live stream chat.
Power hour.
All right. Okay. Yeah. Collectively over $1 billion in volume just in the last 3 trading days. Jesus. We have some big prints today. Those are big prints. Holy shit. There's over $2 billion traded in Excela this week. That's crazy. There's over 2 billion traded in Excela in dark pool volume alone. I'll go ahead and put this up here for others to see just really quickly so you can see what the volume print on this was. This is what we're pulling from Unusual Whales. You can see all the volume. You only really want to look from 719 and above, but you can see there was a 1 million share order here. Hold on. Size of 1 million, volume 901 million. Okay. I'm making sure that I'm reading this right. So this is over 2 billion shares, close to one. Let me just get a calculator because you know what? My brain's not been working lately. That's $5,810,000. Jeez. All right. Well, that's enough of that. Get back to TradingView. And let's catch up with chat, all right? Okay, BBIG got punished today. Yes, I did see that. So this is what I was looking for. This big move to the downside. This is what I was waiting for. This looks like liquidity hunting. This is definitely liquidity hunting right here. All right, so we've got a huge move to the downside. I'll look at this on the 15-minute chart, and let me put my HTF liquidity indicators up here. All right, you see this? This is exactly what I was looking for. All right, big liquidity hunt, huge liquidity hunt. This was, let's see, the volume to the downside. We had this huge spike of volume on these two candles back to back, okay? That kind of came out of nowhere. That's collectively 3.12 million. And then they sent it down. It took 9.8 million shares worth of power selling pressure just to get this down into this price area. Now you see the candles are recovering rapidly. That's your signal. This is a buy signal. Now, I'm not telling you what to do, and I'm not recommending people just buy BBI stock blindly on my information and what I'm telling you. But the reason why I'm looking at this is because this is how institutions fill big orders. They're able to use small volume, at least relatively small volume, in order to push the price in a direction that they want. This has been barcoding for a while, so they've been pushing price around quite a bit, but it's only been consolidating in about a 10 to 15 cent range right now. The big area that they wanted to get this down to, they had to collect enough shares in order to push the price down to a level that would scare the shit out of retail investors and then drive it down far enough that they could start scooping up some of those retail stop orders and scooping up shares from retail investors that were looking to escape, basically. Now, what's going on is you see it's rapidly recovering on equal volume. That is a sign of strength, okay? The institution drives the price down into this area, and now they're trying to collect retail orders. They're trying to scoop up all the stop orders, people panic selling. They're holding it right here just for right now, but they need to make a move soon. So they're gobbling up all these shares right now. And people that are panic selling right now are going to feel really stupid when the price starts skyrocketing on them in just a couple of days. This is a very sharp move. It's uncharacteristic of the movement that's been going on, and it's also uncharacteristic of the structure that we were in, right? So you have this big structure, this symmetrical structure that BBIG has been trading in for all of this time, okay? And now all of a sudden we've had a break of structure. It's broken down below this significant level of support, driven down into an area that was marked out as a liquidity area because we tested this low once before on, once again, a high spike of volume. This was roughly, 2.6 million. So it was comparable volume. Now it took them a little bit more, around 2.8 million in just this one candle to push the price back down here. Now what we're going to end up seeing is you're going to see a tweezer bottom on this candle, this is going to close above this area, regain support above $1, and then from there, the price will move up again. Now, they may have to do this several more times to fill the orders that they want, but this is a sign of an institution that's collecting a large amount of shares. This is how liquidity hunting works. You might also hear this referred to as a liquidity clear out or liquidity raid. It's all this just different terms for the same thing. This is just telling you that institutions are trying to fill a really large order. Most likely, you're going to see this getting filled in the options market. Deep in the money calls, or in this case, 50-cent and $1 strike calls getting filled at rapid paces by the institutions. Okay, so this is what you look for. And now comes the opportunity to scoop some up for yourself. So I'm actually going to go and look at what I can swing trade here in BBIG, because now it's in this level where I clearly see that this is a liquidity hunt. I can clearly see this. And for me, this is an easy swing trade. This is precisely what I look for when I'm trying to grab a quick trade, get into something, and get out by the end of next week. So this is one that I'll quickly swing to the upside. And if I'm wrong, like I lose out on what, like 20% of my position. It's not a huge loss. This is one of those trades where you grab a position while the institution is holding the price down low on a rapid spike of volume to the downside, where they can scare retail and get people to sell out of their positions in order to give those shares over to the institution. So I'm doing this off screen right now, but I'm going to quickly go and look at what the options pricing is for BBIG, and I'm going to go and see if I can go find a strike that's reasonable for me, something that's priced really well. And you know what I like? Okay, that's not too bad. It's not too bad. Okay. Okay. So this is a really big gamble, what I'm looking at, but there's strikes for $1 July 29th that are trading at about 10 to 11 cents on the ask right now. You might be able to get a slightly better fill depending on your broker, but that is a reasonable price range to me. Where you give yourself 1 week. This is a position that you swing into, Monday, Tuesday. The move is likely going to happen within the next 2 trading days. At the very least, we should see an upswing as a result of them taking the price back in the opposite direction. Because right now they're getting their fills, and what we expect to see is for them to swing back to the upside of this rectangular symmetrical structure. Okay. See, this is how I can tell that it was a liquidity hunt specifically. So we have this structure that we formed, right? We were swinging in between these areas. We had it did form a ascending or descending wedge, excuse me, which is a bullish signal, and it started to move up slowly through bar coding, but moving back up towards that level. And just before it hit that level, just as it was beginning to look bullish, they sent it a 3-line strike pattern here on the 1 hour chart, and then all of a sudden it just got ripped downward, just a massive teleport move to the downside, and then it hit that liquidity area hard, and the price went down to, what was the lowest point on this? It was a low of 98 cents. So at 98 cents, and then all of a sudden now it's finding support and getting pulled back up. And the volume is strong throughout. So the volume is strong to the downside, and then the pop back up is equally strong. Now we're expecting for them to hold above $1 for the next several hours and then push the price up slowly. And then what can happen is as that momentum gets going, then traders swing back into it and the institution continues buying, pushing the price back up. If they know that a move is coming, then this is the opportunity that they'll look for to scare out retail, grab their shares, move the price slowly sideways after they bring it back above that level of support, which is $1 in this case. And then after they've gotten enough shares and they're happy with their position, then they'll start hammering it with volume to the upside, using the low volume hours to push the price up. And that is how they trade this to their advantage. We're trying to trade like the institutions trade, ride their coattails, look for when they make these big moves. So this break of structure, this is exactly what I was waiting for, and that's why I had some capital sitting aside just waiting for this moment. So the barcoding looks really nasty, and I know that most people are going to look at this like, what the hell are you doing? The price is at this lowest point. Well, that's when you be greedy. That's when you got to be greedy. We had this 2 bull flags here. We were making bull flag, bull flag, bull flag over and over and over again the whole time that we were trading in this area. And granted, yes, it was barcoding, but we know that they're just trying to hold it down long enough so that they can get into a better position. They're in a net short position for the most part. They need shares, especially if they're holding on to a bunch of naked call options that they know they're going to have to hedge for. All right, let's go ahead and take a look at a few of the other requests that we've got here. Guys, if you're in the Discord, I'm sorry that the chat rapidly just moves too quickly, so I can't track your requests. So if you could just send it to me in the live stream questions, I will get to those. Okay. And I'm sorry to the YouTube chat. I appreciate you guys. The membership in the Discord has gotten really huge, and I want to make sure that I'm giving you know giving my time to the guys who have the guys and girls, ladies, who've been so generous as to help support the Discord. So I'm gonna go through their tickers first, and then I'll catch up with you guys. Okay. All right, so I got a request for the SPY, which is easy one. So the SPY, it really moved against all the logic that I had seen. It had a God, like the patterns for the SPY made no sense to me. It was doing this ascending wedge. It had a huge bear flag on it, and it's just continued ripping upward. It's finally selling off today, but that could just be it hitting some resistance. What I'm so astounded by is that the SPY is just moving up despite all this terrible, terrible, terrible news. And at that point, fuck it. I'm just going to have to throw all the fundamentals out the window and just trade based on the technicals that I see, if I can. But this one's basically broken all fundamentals. So we had this structure that's set up here for the SPY. We had a quick dip down below that level, and then it moved back up and hit a new high. So now we've got a break of structure here, and now we're moving to the downside here. So now we've got another channel set up on the SPY intraday. And we're currently making a break to the upside. Now, if it can get above 395, I could see it retesting this 400 level. Even though, like I said, none of the fundamentals make sense. Like, we're going into the worst quarter of GDP growth that we're ever going to see. The Atlanta Fed has already sent out its estimate for a negative 1.5 GDP growth, which is going to be absolutely awful. It would basically guarantee we're in a recession. We've been in a recession. We know we've been in a recession. And for whatever reason, the market likes it anyway. They're focusing on all this bad information that isn't really making any kind of sense. But yeah, there we go. SPY is starting to hit a new level. I'm not going to take any positions in SPY right now. I've already got enough positions in the SPY. I'm playing them long term to the downside because I believe that the market is overvalued right now, and we have all of this bad news that's continuously hitting the market. The banks issued bad earnings. They lowered their estimates, and their guidance is to prepare for recession. Companies all across, especially the big blue chip companies, are all announcing that they're slowing down their hiring, and pretty soon that's going to evolve into layoffs. When that starts happening, then companies are going to start turtling up, cutting the fat out of the company, and reducing their expenditure in order to weather the storm. Taking care of a message at work. Sorry, guys. Okay. All right. So, SPY. I'm still mad about that, by the way. That paper trade that I missed a take profit on by 1 cent, and then it gapped up the next day to hit the stop loss. I'm so pissed about that. I missed that take profit by 1 cent. 1 fucking cent. It was just a paper trade, but it still feels like the SPY personally targeted me for that one. I feel attacked. All right. So on the longer term trend, what we currently have is we have this double top that didn't play, that it started to play out, and then it just suddenly reversed on everybody. This one juked me out entirely. So the SPY moved up on this. Now it's beginning to form what appears to be a head and shoulders. But to be honest with you, I don't even know anymore. I don't know what to believe anymore. The SPY has been doing this for the last week, just making these ridiculous moves, and I haven't been able to make sense of it. I almost hesitate to give any guidance on what SPY is going to do because I feel like it's just a lie. It's already priced in my technical analysis, and it's going to prove me wrong. Well, we've broken out of this area here on this structure. If it doesn't bounce here and get back above 400, then it's coming down. That's the way that I see this. How I read this is that it needs, in order for the long-term SPY to continue showing strength, it needs to bounce at this level right where it's at. It needs to stay above 390, 392. Otherwise, SPY is coming back down. That's just my opinion. The other thing that I see here is a 3 drives pattern, which is a little bit difficult to spot, but a 3 drives pattern is where you have 3 very similar moves pushing a stock to the upside. All right, let's see. Oh, you know what? I'm looking at the wrong ticker. I was looking at Apple when I looked at this. So the 3 drives pattern isn't on SPY. Sorry about that. I don't know where my head's at right now. It was the cipher pattern that I was looking at. Some call this a butterfly. So depending on where you're at, cipher patterns are basically it's a asymmetrical structure in the market where you have a stock, or in this case an ETF, that is making these large volatile swings, testing highs and lows, and it sets up a lower low and then moves to the upside again. And you'll notice these triangles converging on these points. This is one that I'm only experimenting with. I haven't really tried trading with these cipher patterns very much. But overall, my understanding is that this is a bearish pattern. I need to do a little bit more work on this in order to be even reasonably confident. But this is one of those patterns that was brought to my attention. I believe Occam's Phaser was the one who was pointing this out on the SPY's current movements. So now that it's completed this pattern, the next move that it would make would be to the downside. But don't quote me on that. I've been off on the SPY a lot lately, so I'm going to kind of reserve judgment on this one. The one that I will actually look at that is in relation to the SPY is Apple, which I believe has hit a top and is getting ready to break down now. This is where I had seen the 3 drives pattern. So the 3 drives pattern, very similar to a cipher pattern, but it's very directional. So what you have, the 3 drives pattern, I'm much more confident in calling out. Let me get my fib tool. Where's my fib tool? Oh, here it is. All right. So the 3 drives pattern is you have a large impulse move to the upside with a correction and an additional move that matches it on a very similar time frame and then a similar retrace. The key here is to read fib levels. So here, the first move, I'm looking at the fib retracement where it breaks back down and approaches or touches the 6180 level. Let me fix this just a little bit. Okay. So we've got our first impulse move, and then it retraces to the 6180% fib level, okay? So since this is the first move, our next step in order to confirm that this is a 3 drives pattern is to get a trend base fib extension and draw it once again from the impulse move to the top and then back to that fib retracement level that we had called out. And the next level for this to reach is the 127 level, which it hit right here. So this is our next level. So let me go correct this. And now we need to do our fib retracement once again. And we need to see if Apple touched the 6180 level, which it did not. It broke pattern. It never approached it. So this pattern broke down. Apple's just been screaming towards the top. I don't even understand how anybody can afford an Apple computer in this environment right now. It makes no sense to me. So my TA is all screwed up today. I'm bearish on Apple in the long term, but I'm beginning to think that I'm wrong.
So one thing I can say about Apple right now is this tends to be historically a very strong quarter because of back to school. They run their back to school promotions, they give the gift cards with purchases and whatnot, and everybody's gearing up for going back to school in the fall and going back to college and whatnot. So you do have this big wave, and this is typically the season that this I think for them is quarter 3. It's either Q2 or Q3 because they believe they end their quarter in spring. No, I think their last quarter is in spring, which is their springtime is generally their weakest quarter.
Gotcha. My thinking with it was that inflation was going to push people out of the market and they would no longer be buying Apple products right now. It just doesn't seem like the right time to be buying Apple products of any kind. Let me go and get my charts all arranged here. I want to watch some of these on the other charts. Nice move on Excela right here. Nice bull flag or bull pennant. Let me check the fib on this one. Retracing back to the 236. So if Excela bounces here, then this would be a nice, nice continuation pattern. We'll be looking out for that. Let's see. I got requests for T2 and Sens. I like Sens. So let's go back to our T2 review. I still have that paper trade. My trading panel's not connected right now. But T2 is forming a double bottom actually. So this is actually quite good. It looks as though it moved off of this level and started heading skyward, and then retraced again over the next couple of days. So since it re-entered this zone, hold on, guys, stand by. Hey guys, I have to step away for just 5 quick minutes. I'll leave you in the capable hands of the mods here just to do some additional analysis. You guys want me to just leave some of these charts up here? I just need 5 minutes.
Yeah, that's cool, brother.
All right, thank you. I apologize.
Ruff, you want to talk about where we're at with Xela?
Where we're at, where?
With Xela.
Ah, yes. Pop up my bigger chart here. Seems like we are on the overall move. We're toying with the 23.6 retracement level, but we did, if you take from, let's see, when did this start? Oh, interesting. Okay, cool. So yeah, if you take a fib reading from the bounce and draw it from 1390 up to the top, right now we're resting on, we bounced off of the 38.2 at 1504. We are currently trading and toying with the outer edge of a bull flag, which is pretty sweet. So hopefully we can gain up some momentum. I'm going to throw the speed fib on mine and look at some levels here. Yeah, so we really want to keep either trading sideways and consolidating a little bit more, or make a move to the north and break past that, get back into that zone of 1525, 1530 again. And I feel as though if we can do that, if we can trade sideways for a little bit longer, we might pop out there and make our next move to the north. I think we have some liquidity pools right around 17 and another one at 19 to the upside. So those are the levels that I'm currently watching. It's never a guarantee that they're going to hit, and it's never a guarantee as to when, but so far they've been kind of hunting down these liquidity pools and skipping the price kind of through volume shelves and trying to scoop up shares. So that's where I am eyeballing my next pullback, major pullback. So hopefully we're on the upside until then. What are you looking at, Num?
Xela.
Yeah, my first buy-in was right around 11 cents. And I averaged in and took some profits, came back out, and I've gone in and out of the play a couple of times, but always keeping a pretty large position. I'll take like 50% of it out from time to time, just to try to catch a dip and buy back in on a retracement. But that was when it was moving fairly consistently, and especially in after hours. It was one of those plays that was like playing slow moving chess, slow moving speed chess in after hours, watching the levels. Let me look at TTO and ATR. I haven't peeked at those for a minute.
I'm really waiting for my UVixie calls to print.
Yeah, it looks like TTOO is currently right now. It looks like they're liquidity hunting. There's a pool at about 13 cents, 13.50, and another one at 13.29. It just took one out at 13.80 and at 14. So I think that's why they were marching it down. And then there's nothing else outside of those two. The rest of them are north at 14.50, 15, and 16.25. So if it can pop down, I don't even know if they're going to bother with this one at 13.28. That looks like the drop down from this morning, and then it bounced back up, recovered, walked down a little bit. I think that was the low level. That was where they bought in at and dumped the most. So I think they're just scooping up shares in this zone here. Seems like we've got a decent amount of buying at the 14.50 and 15 again. So those are probably the next levels we march to on that one.
Hey guys,
And it
just
is
letting you know that I got back.
Oh, hey, there he is.
Hey.
Yeah. Lastly, TTOO is in a downward trend, so watch yourself.
Yeah, I was looking at TTOO. It's that was the one that I was covering for Savvy Trading. Thanks, dude. Shout out.
Yeah.
So the T2 level, it had attempted to fill this gap here and then broke down after that, and now it's filled this double bottom. So if we get a bounce here, then that would be completing a double bottom, and then a breakout above 14 cents. You could see upside to at least 15 cents. And we would be completing this market structure. If we got a breakout above 15, you would see that pattern complete, and we would likely continue to fill the gap back up to the upside here above 17 cents. So it's a lot to hope for right now. But this one was just a short-term swing trade, just to try and capture that big swing down and another big swing up, especially given their FDA news for their Lyme disease detection test that is being granted device designation. So, good news for them. We'll see how it performs in the short term. But if it breaks down below this level much farther, then it would probably be time to cut loose. Don't hold on to bags. At least not bags like this. If it's something that you're just swing trading, take your losses when they're in front of you. Recognize when you're wrong. And if I'm wrong, I'm wrong. Okay, so Sensionics, actually looking really nice. So I see it doing a bull flag right now. But I'm also seeing a 3 drives pattern on this, I think. Yeah, these are very similar moves. These are very similar moves. Okay, so here's what I've got for Sensionics. Short term bullish, but very short term. Yep. All right, so it hit this area and then retraced back to the 6180 level. And then from that area, it almost touched the 6180 level. Oh, no, it didn't. Maybe it's a break of trend. We shall see. It's very close. It's very close to a 3 drives pattern. It's really hard to tell. It needs to fight here and get above this level. It needs to keep ripping. So right now, short term, you do have a bull flag or a bullish pennant that's formed after this impulse move. So if it can break out above this price level, 133, and keep moving upward ahead of this pattern, it's basically a race to see if it beats it out. I guess we'll see. Not currently very sure of anything right now. Especially on these growth stocks, man. Sensionics, even though I believe that it's a really good company, the market doesn't agree. What I have learned is that the market can prove even the best thesis wrong, including where the company announces that they have finally received their FDA approval and then the stock promptly sells off by 80% overnight. Let me take a look at some of the other indicators here because I didn't pay much attention to the MACD. All right, so we're finally about ready to get across on the MACD here. Let's see. Bouncing around in this symmetrical structure. Breakout levels above 140. So this is where we need to see a breakout at. If we break down below 125, then that's no bueno. Most of the volume, all the buying volume is down here. There's a gap in this area where there's just not a whole lot of trading here happening between the 125 and 120 cent area. So if Sensionics bounces and breaks above this 140 level, then we could see some upside back up to 170. We may actually reach that level again. It has the makings of a cup and handle. It's a little bit wonky right now. It's a very, very wonky, ugly looking cup and handle. This double bottom broke down as well. This is where you had the makings of a double bottom, and you see we had this candle, this red candle, close below the body of the green candle, so that's no good. It needs to show some serious strength right here. RSI is bearish as well. It's getting rejected by the moving average. The MACD is crossing, but the MACD is red. STC indicator is still red. The best case scenario, I think, for Sensionics is to continue consolidating in this range. That would be the best thing for it if it could just stay above 125. But it may not do that. We're just going to have to see. Thanks for calling those out, Savvy. T-Man, I'll take a look at FPI for you. That's Farmland Partners. Okay, I've not looked at this one ever. I see you got a double bottom pattern, so that's a triple bottom pattern. How about that? Interesting. All right, so on your 30-minute chart, you have a triple bottom pattern off of the. Let's see. All right, you got a bottom here, bottom here, bottom here. The important thing is that the candles here have not closed below these lines, the 1333 support. It can wick down, and that shows strength, and it made that big move to the upside. It's already completed it. Interesting. Interesting. All right. You have another double bottom right here. It hasn't quite completed. It's been consolidating. Let's see what this looks like on the 15-minute chart and see what we got. This this bullish divergence on the RSI completed very nicely. This wow, this thing's really strong. This showing a lot of strength. MACD just crossed and it moved instantly. This one could be a good swing trade. It really could be. Farmland Partners. I don't know anything about this company. They're traded on the NYSE. It's a REIT. I'm assuming trading in farmland. What is the case for this? I'm curious, T-Man, if you just want to give me like a really quick like elevator pitch for this company there in the questions. Profit margins look good. 16, 21, 25, 13, 19. They're issuing dividends. It's nice. It's not a big dividend, but it's not a bad one. Technicals look good. I agree. The analysis from Wall Street is good. I don't know how many analysts are looking at this one. Management and acquisition of farmland and land with agricultural development potential. Hey, as long as it's not Monsanto shit. Big boys buying up farmland, Bezos, Gates, etc. Oh. You know what? Those fuckers would do that. And I'm sure that they'll be charging people a really high premium for actual food. We're going to go to the days of Soylent Green here pretty soon. Wow, this is a really bullish structure. You got me wanting to jump into this now, actually. You actually do have me wanting to jump into this. It's a good thesis. Wheat, soy, corn, everything is going to be at a really high premium soon. This thing is showing a lot of strength. This consolidation to the downside, I like it. If I draw a channel on this, yeah, it's bouncing on this support with this triple bottom here. And it's formed a symmetrical structure here. Oh, wow. I really do like it. I really do. I'm going to have to look at this one a little bit deeper and do a bit more analysis before I jump into this thing, because this is a long hold stock. This is not a day trade. This is something that you invest in for like years and years if you do something like this. Real estate trusts, property is definitely going to be in high demand for farmland. And I could see these guys making a lot of money. I'm going to do a little bit of analysis on this one, but I've got this written down. I like the play. I really do. Thank you for this call out, T-Man. Really appreciate that. So FPI, I'm adding this one to my watch list. Let's see, I've got this in here somewhere. Here we go. All right. Thanks for that note. It's really nice. I like that a lot. Let's see. I mean, you missed the latest move, T-Man. So the move down here at 1340 was ideal. It's starting to show retracement, but it's moving slowly to the downside. You can try to get a re-entry here at 1380. You could try to get a level at 1380. But it might move soon just based on what I'm seeing here on the technicals. Your best price that I see available near term based on these technicals is 1385, but it may not reach that. It's doing a bull flag right now, and it's getting ready to break through a level of resistance. It might bounce off of the top of this channel and retrace again. So you could wait and see, but this is one that you're gonna have to play with a long game mindset. Price shouldn't really matter to you, honestly. If you're playing with a long game mindset that this thing is going to be extremely valuable in the distant future, then don't worry so much about the price. Currently, I'm looking at some other analytics from another tool that I've got here. Okay. Downside to this stock is that it does have quite a bit of debt. Its debt to equity ratio is actually 0.91, so it's not great. And it's not awful either. Their price to book value is pretty decent, but they have low returns on their dividends, so the return on equity is pretty bad, and the price to sales is a little expensive. That's the downside in terms of like just the regular financials, but their earnings have been surprising repeatedly over the last couple of quarters. right now the technicals to me look really good, and there's quite a lot of analyst interest in that one. So let me see this one on a very long term. Ooh, wow. Wow, look at that move. Bro. Jeez. This thing moved. How long has this company been trading? Not long. Only since 2014. All right. Well, that's enough of this one. Thank you for bringing that to my attention. I am interested. All right, I am interested. I'm gonna do some more research on this one, and I might add that one to the long-term plays if I like what I see. We'll find out what the company's all about. I'll do some DD on it. Let's go take a look at AMC. Oops, moving around my resistances. Okay. Let's see. AMC had a really harsh move to the downside. It's big volume bringing it down. It's consolidating on a bear flag. And it looks like it's breaking. Well, shit. It looks like AMC might be breaking to the downside in the near term. This thing's getting hammered right now. The good news is that AMC is still tracking its higher lows patterns right now. I don't know if you see this, but if you look at the levels here, AMC's been swinging big between $11 and $15, and it's been forming it basically is formed an ascending triangle. It's a triangle with a flat top and higher lows, and when it breaks out above the top, it breaks up big. So if AMC can hold this level at $15, just $15, if it stays here and consolidates for a while, then I think that AMC could make a huge move. Interestingly enough, this is what AMC did a long time ago. If we go back, way back in time to June of 2021. That is January 2021. So you had this area of resistance right here that was formed when AMC went to, what was this, $12.16 in late April. And then it started to do this slow crawl to the upside, and it had a big impulse move where it was breaking out to higher highs. Or I'm sorry, it was forming lower lows. Jesus, my brain is higher lows, higher lows. What the hell is wrong with me right now? I need more sleep, man. Anyway, so I'm looking at this yellow line here, the horizontal line, and this ascending line here. So what ended up happening is AMC made this big move to the upside and a big impulse move. All right, well, it was slowly crawling upward, and then the big impulse move sent it soaring above its previous highs of $14, and then it got slammed back down in after hours, but it consolidated above that level of that ascending triangle, right? So what I see when it makes that move and it holds that level is that it wasn't able to break that back down into the pattern and cause it to break down. So AMC had nowhere to go but up. And it didn't take a lot of volume. Once the volume started carrying it to the upside, it got more and more out of control. So this was like, it was like, between 5 and 20 million shares of volume on each hour. It varied throughout the day, obviously, but it didn't take a whole lot of volume in AMC. It was trading so well. I should preface, this was back when AMC had a float of like, what was it, 250 or 300 million shares. So this was quite a lot of volume for AMC trading consistently in this period. But it moved up slowly on the low volume, had a large impulse move to the upside on high volume, and then retraced on low volume, and then started bouncing up again once it completed that pattern. So let's compare that to what we see right now. We have a similar slow crawl upward. It's taking a lot longer. But this slow crawl upward is looking very bullish. And we've got this level of resistance way up here that it needs to break above. If AMC can keep setting up these higher lows and break above $20 and hold it there, even if it's just a big impulse move and it comes crashing back down, but as long as it holds that level, if it can just make those big impulse wave moves and hold the next level of support consistently, then I think that AMC is due for its next big run. We'll go ahead and close out some of these, and then we'll go look at the next. We'll go look at the next ticker. I'll cover Gamestop. I believe I've already covered Bbig and Excela. We're almost at the end of the day. Oh, don't cry, man. AMC will have its day. AMC is doing just fine. The important thing is not to panic and not to get overly emotional. AMC's float right now is, I think, 510 million shares, somewhere in that area. GameStop is kind of doing the same thing. It's just making this slow crawl upward. It had a big impulse move that just didn't hold up support. It just broke back down. And then a big impulse move again, and then formed this structure. So GameStop is closer to what I was looking for. GameStop has made this big impulse move, consolidated in a range, and then broke up above, and then broke back into the structure. What I would like to see is for GameStop to actually turn around and break up out of this structure again. By the way, I did notice the split today. It's kind of nice to see GameStop at these reasonable price levels again. The split was overdue. So it's nice to see it at these levels. If we can see GameStop breaking above 37, 38, that would be ideal. It needs to hold this level a little bit higher for it to make its next move to the upside. But GameStop is holding up very nicely. Overall, this structure that it's been in, this has been all consolidation for quite a while. Big swings, but still, it's a lot of consolidation. The good news is that it worked out this double bottom pattern and made another move to the upside, and it has another double bottom pattern here inside of this structure. So if it can complete this breakout, if it can just get above it, just please do it. Just break out above $38. That would be fantastic. It's so hilarious to see GameStop's chart reduced by the it's so funny to see these prices with the split now. Like to see that the highest move was 120 now according to the split. You got to multiply it by 4 in order to get what the real value was of that squeeze. I'll tell you what else I see here is GameStop breaking above this channel that it's been in for a long time. y'all see this. It made the move above. So if GameStop bounces here, shit. We'll keep an eye on it. Ding, 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 ding. That's the market. All right, let's go see where Excela finished today. Nice. Good push. Good push. Ended the day green. Very good move. Casual fool. How about a crackhead spy going into next week? Am I going to get demonetized for drug references now? Excela's moves are very nice. It likes to run in after hours, but these pushes at the end of the day are what are so encouraging. So I'll tell you what, you could play these swings to your advantage. Excela really does like to run in after hours by a significant amount. And then it retraces early in the morning. If you can capture those swings, and you should be like you should be a relatively you should be a relatively what's the term, consistent day trader, or at least be able to be watching this chart all day in order to do that, so that you can capture those swings. But yeah, Excela's got the right stuff.
They like to keep a wide spread too. You can kind of anticipate certain moves by the spread closing and opening. Sometimes it'll be really far apart. At the moment, it's within a fraction of a penny.
Gotcha. Thanks, J Ruff. That is helpful.
Yeah.
All right. So, Excela is making a slow crawl upward. It's painfully slow given where the prices are currently at, but it is making the right moves. It's getting more consistent gains. This is what we want to see. This is a straight up clown show stock market, dude. Tell me about it. All right. Jason Barrio, you want me to cover GMVD, but I'm out. GMVD, I'm out of it. And honestly, I can't tell anybody what to do, but I don't advise trading with this company anymore. I'm not going to support the dude. Dr. Yakov, the CEO of this company, made a direct promise to their shareholders in an interview on YouTube through Hoop Money's channel that no dilution was planned or possible, and then promptly diluted by reducing the price of warrants on top of giving a discount to their institutional shareholders. So they pumped this stock on retail's back just to give their institutional shareholders a chance to get out of their positions at a premium and dilute on retail on top of it so that they could collect $2 million. As far as I'm concerned, the CEO of this company is a dirtbag. I'm not going to take any risks trading this thing. I am not going to, and I don't care what the stock does. I don't care what it does. I'm not going to trade it. Hey, Jan. TD, appreciate you a lot. Following a couple of months, awesome work. Thank you. I know you do not want to do OTC stocks, but will you be willing to check out a lithium stock called SYAXF, 20% stake partner? Yeah, I really don't want to look at penny stocks. I see a double bottom pattern, but this thing's barcoding all over the place, man. There's no control over this. Bad income, no revenue. Technicals are unreadable, basically. And they have a float of 6.29 billion. Homie, no. This is not a good idea. I'm sorry. It's not financial advice, but this is not a good idea. This is not a stock that I don't think that this is a stock anyone wants to be investing in. If you want to pick a lithium mining operation, pick something that's trading on the Nasdaq and New York Stock Exchange. It's your money. You do with it what you want. but I would not touch. I would not touch this. This is not. This is not for me. The only thing that I can tell you as far as like technicals go is that you have a double bottom pattern which appears to be playing out, and there's a bull flag right here, a little bull pennant that seems to be working out in your favor. If it completes, then you'll have the completion of a cup and handle. The upside could be, I don't know, maybe to 20 cents. You just have to see what it does, but not a it's not a long investment for me. I wouldn't trust a company that's trading on OTC markets with this much dilution. All right. Let me catch up with everybody else, see what's up. Let's see. Weber's finally hit its bottom on this ascending triangle, so I'm waiting to see if it'll complete the pattern. I want to see Weber break out again. I think that this one could run again. The short interest was pretty huge on Weber at the time that I had looked at it. I'm only gonna hang out for another 20 minutes or so since it's Friday. I gotta get my reports out the door and make sure that I am, keeping my clients happy. But after we get through these last few tickers, we'll go ahead and close up shop for the weekend, or for the week, and go enjoy our weekend. Kelly Thayer, I see your request for GOEV. Claims to be one of the most crowded short positions. This is true. GOEV was actually quite highly shorted, and shorts actually got punished pretty badly in this one, from what I recall. This big impulse move that you saw here was news that they were getting a partnership from Walmart, and it just crushed shorts badly. They got smashed. There was a whole bunch of shares returned and new shares borrowed, so there's new shorts coming in, old shares getting squeezed out. They got punished really badly on this one. I was not in it, but yeah, gotta say, it was pretty awesome to see. So the short interest has only gone up, and it's gotten even more ridiculous. The amount of short interest is 30% of the free float right now. What you have to recognize is that a lot of that is new shorts. A lot of old shorts ended up getting squeezed out. So if you look at the days on loan, notice that the days on loan rapidly dropped after it had that squeeze date. It's not really a short squeeze, air quote, in the traditional sense, since it didn't like jump by more than like 100%. It jumped by a lot, but a short squeeze is like, 2, 3, 4, 500% or more typically, because you have so many shorts scrambling for the doors trying to get out. Let me go put my Ortex data out here in front center. That is the wrong.
And just keep an eye on GoEV. We were talking about it this morning, but there was a filing about that. I think it's like 300 million, and then buried in that filing somewhere was another. They issued warrants to Walmart whenever Walmart bought that fleet.
Okay, so dilution possibility.
It's something to keep in mind for the people that are in it. I would definitely go out and check that filing and read through it real quick just to make sure you know what's going on.
Yeah, it is good to know. Thank you, homie. Much appreciated for the heads up on that one.
Yep.
See, this is the power of Hell's trading floor, is having all of the analysts and the professionals all working together, collaborating, talking to each other, because I'm just one guy, and most of the DD that I have to bring to you guys front and center is not done by me personally. It's done by the entire analyst team.
Yeah, I think Scrap was the one that found that filing, or was talking about the 300 million before. And when I dug through it even further, I found that they had issued the warrants for Walmart or something like that whenever they ended up buying the fleet.
Interesting. Holy shit, Semper Fi! Thank you for the $100, dude. You did not have to do that. Thank you, Semper Fi. Wow,
That's awesome.
that is
Thanks, man.
incredibly generous. Thank you so much. Well, hey, if you want me to cover a ticker, dude, it's the least I can do. Shit. Anyway, thanks, Logical Chaos, the newest analyst to be added to the team, aka the Zebra. Why do they call you the Zebra anyway? I don't even know the story behind that.
Oh man, what are you gonna make me tell this?
Wait, I gotta. You gotta. Hold on.
All right.
Okay, Logical Chaos, aka the Zebra. Why do they call you the Zebra?
You've heard me in chat throughout the days. I tend to pop off whenever I get excited or angry about something, and this was a while back during one of the Fed press conferences, and there was a bunch of us that were in spy plays, and we were sitting there playing the volatility, and we were waiting for the pop to come off of something that he was saying, and we kept yelling, just don't say the word balance sheet. Don't say balance sheet. Don't say runoff. Don't say any of that stuff. Just don't say it. And every time we would be sitting there talking about it, one of the freaking people that would ask questions would just, so I know we're not going to talk about the balance sheet, so I'm not going to ask about the balance sheet. So with that being said, do you have any comments on the running off the balance sheet? Do you know what? And they would say every single freaking word straight down the list. And every time they said it down the list, it would tank the spy calls. And what ended up happening was when I started screaming about it and was like losing my crap over it, I wasn't using the actual words that they were saying, so I was substituting it. So it was like, just don't say zebra. For the love of God, don't say zebra. You have one thing not to say, and it's the word zebra. Don't say zebra. And you immediately start saying zebra. And it was like a 20-minute just freak out. And at the end of it, all of a sudden, somebody in the Discord had changed my name to the Zebra, and I was like, "Oh man, I didn't even realize I was doing this."
That's amazing.
And the rest was history.
Wow. That is hilarious. You know what? I love it. You will always be the Zebra in my heart. I wish I could have been there for that. Well, thank you for sharing the story. Now I have the timestamp for when you told that story, so now I can immortalize it in a YouTube highlight. So here's to Logical Chaos, aka the Zebra.
Just pop into voice chat whatever you guys want. You'll hear me pop off with something stupid like that.
It really kind of brings comfort when your insides are screaming and you just don't know how to converse it, how to portray it, and then you just come right up behind me and go, yeah.
All right. Well, Goev, it does look like a very viable short play. The shorts that got into it are very recent, though, so many of the ones that are still in it from before are probably would have gotten in somewhere in this price range between 210 and 285. And then any of the recent ones, in order for these guys to be squeezed out, they've been, I don't know, they may have just day traded it, who knows. But there was an opportunity for them to capture some significant gains here between 25 and 30%. And then there was another impulse move to the upside. This could have been shorts, swinging positions, getting into their short positions and then getting out of their short positions. Who knows? The dilution possibility that Chaos mentioned is very much a reality. So, please be careful of that. All that being said, I like the consolidation that it's doing. It's setting up this asymmetrical structure that's trending to the downside. Very similar to a bull flag. And since it's only a couple of days long, like maybe 2 weeks, 2 weeks long, there's some possibility for this thing to get some upside, especially if retail caught wind of this thing. Retail can push things to pretty ridiculous, unimaginable heights in a hurry. At the moment, I'm not convinced though, so I'm not going to take a position in this one. I'm just looking at the technicals, and I think that it has some room to go down, so I wouldn't be just jumping into it. I would wait to see for some confirmation, maybe a recapturing of this $4 level. That would at least tell me that the interest is still there. But if not, and it continues to move to the downside, then shorts would absolutely be in control below this $3.25 level. All right, so let's go recap Excela because it likes to move in after hours quite a bit. And I
It
saw
has
somebody's
to trade down in the first like 30 minutes to an hour before the retrace and the pop.
Yeah. I see a lot of people that are like freaking out in the YouTube chat, like, "Oh my God, Excel is selling off! Stop panicking, please calm down."
Don't fall for it.
Yeah, please don't, please don't,
Look
please
at the
stop.
last week. It does this every time.
Yeah, look at what it does every single time. It goes straight down and then it screams to the top. Like it makes a 9% gain in after hours from the bottom after the first 30 minutes after the closing bell is selling off. Then it runs again. So just calm down. Like, just stop freaking out. I don't know why people freak out so much over these. Like it is a penny stock, okay? And maybe some people have been hurt by penny stocks. That's valid. But please, it's like don't be that emotional about it. You have to have at least some. You got to be at least cool in the head if you're going to trade these volatility plays. If you're day trading this, like this should be heaven for you. This thing is making back to back like 10% swings every single day. You can make huge profit off of this, especially if you're trading leverage. And this is a high volume stock right now. This volatility should be a dream. If you're doing swing trading like I am, where you're waiting for those big impulse moves and then capture profit at the top, wait for the swing down, and oh, thank you, casual. I'm sorry, I didn't realize I was still showing my vortex. Um, the God, now I forgot where I was at. Oh, if you're doing the big swings like I am, looking for swing trades and these big impulse moves like this, this was a huge opportunity to capture profit. I didn't, but like, right now, why would I jump out of my positions right now? They're up they're up like 20%. This is a good start. This is just the beginning of the move of what I was expecting. And ultimately my target, like I'm not worried about these moves like of half of a cent or like 2 pennies. Like, I don't care about that. I'm not thinking about that move. I'm thinking about this move. I'm thinking about this kind of shit. Like 200, 300, 400% gains. Just an unexpected impulse move to drive the price up to new highs. This thing is unpredictable. When Excela has these huge moves, especially as we approach $1, it has the potential to cause a lot of pain for market makers who will be in a hurry to delta hedge their positions. And one of the things that I was calling out specifically on Excela was the huge amount of open interest on the call chain. So I'll go ahead and show this to you guys again.
Yeah, and TD, honestly, like this is still in a consolidation pattern. Like this is a good this is a good setup for this stuff. Like this is a very large move into lower highs, higher lows. Like that's a consolidation pattern that you want to see after a very strong move.
Exactly. Yeah. This consolidation that's going on right here, the retraces, and I'm not showing it at the moment. Thank you, Jason, for the $2. No problem, dude. I'm happy to do it. But yeah, the retracement that you see in Excela right now is just continuation. The stock has to relax a little bit. There has to be at least a little bit of selling off as people take profits. You're seeing day traders swinging in and out of their positions, and that's a good thing because they're establishing new levels of support, showing us where that support is, and proving that the stock still has strength. Things don't just go up forever. Like if you see the stock rip by 20% and then it retraces by 5, that's fine. That's a 4-to-1 move. It's a 4-to-1 impulse move to a 1 retracement. That's an excellent ratio of movement. And what I was calling out here was the call chain on this. The call chain is rapidly getting bigger and bigger and bigger. This is what I'm pointing out because the market makers have a whole bunch of these calls that they've sold naked, right? Why do I know this? Because that's how market makers make most of their money. Market makers that are trading in the markets are typically trying to make money by selling options into the market, especially Susquehanna and Citadel. They make money by selling by selling these options in order to collect premium. And honestly, it's an excellent way to trade because you're just collecting income for holding shares. But these entities are moving in and out of positions so frequently throughout the day that to them, like this is small potatoes. They can get millions of shares in dark pools instantaneously if they need to. They have the liquidity and the access to these shares whenever they want them. But when they run out and they're suddenly not that kind of purchasing power or the share inventory available in those dark pools, they have to go to market in order to buy them. Now, as it pertains to these calls, most of the time they're selling naked calls, especially on these penny stocks, because they can sell them for like they can sell each contract for $1, $2, $5, whatever, and just have them, expiring very far out. And they're very confident that they can at least cover their positions if they need to when the stock starts trending upwards. But as long as it's not, they're making money every single time another group of these calls expires worthless. So, why buy the shares if you don't need them? That's just an unnecessary drain on your liquidity. So the market makers sell these calls naked with the understanding that if they reach a certain price level, then they will buy shares and they will acquire them. They will be able to acquire them if necessary. Excuse me, my English is failing me. They can acquire these shares if necessary to cover the call positions and still take a profit of some kind. Maybe not a great profit. They may even lose a little bit. But even on the losing trades, they can minimize their losses. But in this situation, if Excela suddenly announces that they've just bought back, half of their float or something, this is a hyperbolic scenario, okay? So it's like not saying that this is what I think is going to happen, but even so, it's a real possibility. So, say retail purchases just a metric ton of all of these shares, and they've locked up most of the float. Maybe not the whole float, maybe the whole float, don't know. But if they lock up a significant portion of these shares and simultaneously Excela issues a buyback and announces that they are repurchasing their own stock, or say another company jumps in and says, hey, we've made this large purchase, we're now acquiring 20% share stake in Excela with the intent to hold for several years. If that occurs and you have a stock that's being locked up by a major institution and those no longer exist on the float, or at least are not available for trading by these market makers, then that drastically reduces the inventory for them. And they've got all of these calls sitting out there in the market, which this totals up to about 182,692 calls. Multiply that by 100 and you've got 18.3-ish, like estimated 18.3 million shares. That's how many shares they would need to buy in order to hedge all of these calls. Now, market makers probably aren't the only ones selling these calls, but they make up the majority because they're providing liquidity to the market, and where there's demand, they will fill the order. So as retail continues buying and buying and buying and buying and buying these, there's an accumulation of debt or liability, not debt, but liability on their balance sheets. The market maker has on their books these 18.3 million shares worth of calls that if for whatever reason Excela started running to $1 unexpectedly, all of these would need to be hedged for. So they would need to buy 18 million shares in order to make sure that that was covered and hold it until delivery occurred or the price fell back down below their risk tolerance threshold so that they could then de-hedge the position. And at that point, they might buy some puts and then sell out of their positions in order to capture the most profit and take the minimal losses. So that kind of moving around, shuffling positions happens automatically. And one of the things that I suspect is not accounted for by these algorithms, because it is algorithms that do this trading for the market maker, they're going to be holding on to this risk without accounting for the fact that the float may be totally locked up. And if that does happen, let me add all of this up. Currently, 4% of the float is here, locked up in at the $1 strike for this particular stock. As this continues filling up, there's a possibility for a gamma ramp to develop that would launch this thing, because when the market maker has to cover this position and delta hedge for this, say the stock starts to go a little, let's just put in this hypothetical scenario, okay? And let's be conservative with it, all right? Because let's just give ourselves a conservative case. Say Excela just continues going up on this trend trajectory and starts getting more interest, okay? And it's taking a long time, like it's worst case scenario, this goes into next year. All of a sudden, the stock is starting to gain a lot of traction. And, day traders and institutions, they're not stupid. They'll see this opportunity. You'll have some institutional interest in here, especially if the financial situation for Excela begins to improve throughout this. Now, at this point, you might have, say, retail has a modest position collectively, 20%, we'll just say. And there's, at this point, more than likely, those January 2024s are going to be massive. The right now, one of the largest positions is for August, but January of next year, January of 2024, makes up a significant portion of the float that's on the call chain. Now, if the market maker suddenly has to hedge for any of those at this 80-cent price level, like this is the price level where they need to make sure that they have enough in order to cover their positions, all of a sudden, Excela announces that, hey, we're issuing a buyback for 70 cents. And Excela starts buying all of those shares. Suddenly, the price jumps up to this level to meet it, and it consolidates there while they continue purchasing back shares. Now, Excela announces that, hey, we've bought such and such many shares. Also, imagine a situation where now that they've bought back a whole bunch of shares, let's just throw out a number. We'll say 100 million. Okay, 100 million shares gets bought back by Excela. That reduces the float to 325 million shares. Wow, my mouse. I'm not going to say handwriting. My mouse writing is awful. But that reduces the float to 325 million shares. Simultaneously, you have a situation where there's more than 100 million shares that are locked up in call options that need to be purchased. So that would be around 1 million call options. So if 1 million call options is held at the $1 strike price, then that means that the market maker has to buy an additional 100 million shares. So that means that there's only 225 million out of the float that has to be consumed by retail, institutions, and so on and so forth. So if after all of this, you have retail holding on to a huge chunk of this, like 20% of this, that would still amount to about 50 million, 60 million, 60 million. Let's see, 60 million. It would be 60.5 million shares. Sorry, had to do a little bit of head math there. And institutions start buying this up. If that price continues to climb up, by the time that the hedging level needs to be, or by the time the price reaches that level where market makers need to hedge, they may need to hedge for 100 million shares, but institutions may be holding on to a good 2-3 million shares. And at that point, if you have some institution, any institution that's holding on to a huge block of shares, and there's several of them that already are, if they're holding on to 60% of this entire market collectively, then and retail's holding on to 60 million, and the market maker needs to hedge for 100, there's only 80 million shares left to go around. And at that point, they have to fight by pushing the price to whatever level they can tolerate to take a purchase at in order to make sure they're hedged. And that is what can send the price just skyrocketing to new highs. So I know that that was a lot, and I probably didn't explain it very well. I'm doing my best on like 6 hours of sleep. 6 hours of extremely broken sleep.
Man, that sounds like a dream. Kids, man.
Hey, Jason, oh man, I just realized that I wasn't even showing my trading view while I was drawing all that. I was trying to draw some stuff on the chart, and now I realize that I wasn't showing any of it that whole time. Wow. I'm not doing well, guys. Not doing well at all. Unfortunately, I don't have the time to go over it again. Hey, Jason, I see that you say that you're stuck in GMVD, and Flintster says it best: is you're not stuck in your position. All right, it sucks, but in these situations where the position is clearly broken down and the company has when the company has broken faith with its investors, I'm not telling you what you need to do. You have to do what's right for you. But recognize when the thesis is broken down. GMVD was never a long hold to begin with, at least not for me. And the way that I had treated it is that at any time, if dilution occurs and if there was if any CEO gets caught lying, that's it for me. I break faith. I get out of my position. No loyalty. Don't marry the stock. I've changed my thesis on a few things. Some things I still hold on to, like Progenity, aka Biora. I still hold on to my Sens position. I still hold on to my AMC position because even though the companies haven't performed and they haven't been able to meet their deadlines perfectly, I still hold faith because they are still trying their best and they're focusing on growing the company to increase shareholder value. And that's where their focus should be. Their focus shouldn't be on driving the price up to the moon so that people can quickly day trade for a 600% profit. That's not their job. Their job is to make the company functional and make it work. GMVD, the CEO was entirely dishonest, and that's what made me break faith with him. He said that there was plenty of cash, that they didn't need to dilute. There was no plans to dilute. No dilution was going to happen. There's nothing to worry about. Shares are locked up. There's not even this many shares on the float because they're all locked up in Australian exchanges. Blah 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 blah. All these reasons why retail should totally trust me, bro. That was his entire approach. And then as soon as he got this price up to a level that he liked, he provided his institutional investors that were supporting the company a way to get out of their bags, take a huge chunk of money off the table, and then reinvest at a lower price. And sure, they might do that. In the long term, maybe the company goes up, But you know what? That's it, I'm not going to commit my capital to this fucker's idea of how he's going to make his company a success. And what he said to Hoot Money, the way that he lied to him and then just cavalierly said, it's only money. What are you so worried about? Like, yeah, it's my fucking money and you're taking it. You are taking it with lies. And that's what I took issue with. So I'm out of this position. I'm not going back in. And I don't advocate that anybody should try to chase this low or try to or hold their bags because if the CEO is willing to do that, he'll do it again and he'll do other things in other situations that will end up hurting their shareholders just so that he can make a little bit of extra money. And it shows, okay? His attitude is very toxic. I'm not going to support a executive that takes that position. Honestly, if the guy worked in New York, he'd be beaten up and thrown against the dumpster on an alley and left there to wake up the next day with bruises. The dude's a dick. You can't lie to people like that and not have some consequences. I'm not saying like go commit violence against people, but I'm just saying like the guy did people really dirty, and that's not something that you should tolerate or anyone should tolerate. And I saw the comment, Paulo, about Mullen CEO. Yes, I feel the same way about David McCurry. He's been caught lying 3 times now, and that's it. I shouldn't have given him the I shouldn't have given him the second and third chance. Now that's it for me. Hey Jason, yeah, I understand, my dude. It's consolidating right now. There is a little bit of upside, so you may get a dead cat bounce up here, possibly up to 50 cents. If you do manage to capture a little bit of your position back, I got out of my position like up here after I saw this big move to the downside. Like I was like, done, get out, fuck it, abandon the sinking ship. I did my best
30
to let other
minutes in,
people know.
and like clockwork, Xela is heading north.
Oh, really? Ah, there we go. Let's go take a look at it. There, see? See? First 30 minutes of the day, or first 30 minutes of after hours, it sells off, and now it's taking off like clockwork, just like JRF said. Okay, Jason, thank you for the $5. You don't have to do that, but I appreciate it nonetheless. I'm not really going to cover Mullen anymore, but I'm just letting everybody know. Like I'm not gonna put any money in that company anymore. I don't have faith that their company is. He's acting in bad faith now. I don't trust him anymore. He was sketchy to begin with. I gave him the benefit of the doubt. I saw the fraud that was taking place in the company early on in February and March of this year, and we made some cash, took a chance on a gamble, and it paid off. But after that, he started he diluted on shareholders. He started taking back cash out of the company, and he started getting caught lying on those frickin' van deals. So that's it. I'm not doing that company anymore. Mullen is dead to me. Biora, yeah, we could talk about it a little bit. I really got to go though, so this was going to be the last one. Biora is still stuck in this zone of consolidation, but it's a really nice structure. I really do like this. So this is an area of strength for Biora. The structure is currently edging back towards the upside. What I'm hoping it will do is it will just complete this triangle and it will just break out. That would be the ideal scenario for me. If Biora just gets above this level of resistance and breaks out above 75 cents, that's my ideal scenario because the upside to this is easily $1. Biora can easily hit $1 if it can just break out of this area of resistance. It's not very strong resistance compared to the volume that we've had down here. Biora definitely has some serious potential. The problem that I think that we're facing is we got a lot of algorithms and day traders that are taking advantage of its current situation. You might have some institutions accumulating down here that know something, but part of my thesis is that Biora is a long-term hold. It's not one that I'm here to day trade. It's one that I'm here to invest in for the long term. Be like that retirement stock that when this thing finally takes off, it's going to be like my Amazon. You get Amazon for $1 and live off the dividends type of deal. I do truly believe that Biora can be that company. It's just it takes a lot of patience and a lot of conviction to hold on to it for that long. I have a very large position in Biora at this point, probably larger than I should reasonably have, but I I can't explain it. I just really love the company for what it's building. Novel technology, basically smart pills, and it's life changing.
You keep buying, they're gonna have to offer you a seat on the board.
I don't think I'll ever have that much, and I'm not that rich. I'm not that wealthy, homie. Maybe if I could, maybe if some of these squeeze plays could hit back to back, Excela goes to $1.
your leaps hit, you'll be able to turn those into a whole bunch of shares.
It's true. Yeah. If those leaps did print, that would be life-changing money for me. I had a chance with AMC. I can't believe that I didn't take more profit than what I did when it hit $70. Over 90 calls at the $40 strike price that I bought in late May. Yeah, those printed during the volatility halt. I was briefly a millionaire. Yeah, and it's all gone. It's all gone.
Oh man. Well,
I lost.
we'll do it again. We're gonna do we're gonna find something again. We'll get there again.
Well, all the same, it's better not to bank on those big ones because those might happen only once in your lifetime. It's better to be a consistent trader, and if you by luck happen to land on that one trade, that one day trade that you decide to swing, and it turns into like a 10 bagger, then all the best. But my focus is going to be on getting that consistency down, finding those value plays, and that's where I think Excela is, and that's where I think BBIG is. So Biora, Excela, BBIG, Sensionics, those are my big winners, honestly. And that's where my focus is going to stay. I think trying to find those value plays that can be consistent winners. But anyway, let's see. We'll see what it does. I think that this is going to have to be it for me. I'm going to go call everything out here. I'm going to call the session here. But thank you all so much for tuning into the stream. Really appreciate you guys making the time just to listen to me rant and rave all day long. I'm hoping to do a little bit more DD later on. Maybe get a little bit more of a consistent streaming schedule, but it's just really difficult right now. If you are looking to join the Discord, however, if you're new here, you haven't been a part of our group yet, I'd encourage you to check out our link at Patreon at patreon.com/Hell's Trading Floor. Oh, I'm sorry, I'm getting my geez, see how messed up I am? I'm getting my URLs messed up. If you want to join the Discord, our Discord link is discord.gg/Hell's Trading Floor, which you can sign up to join as a member through our Patreon link at patreon.com/The Devil's Broker. Thank you guys so much for watching, and I look forward to seeing you next week. But until then, have a hell of a weekend.